Let's have a chat. First off, just tell me a little bit about what it is that you do. Tell me who you are and what your job is, what it is that you do.
Okay. Gary, we've known for years already now, but I'm Elbio Fernández and from Uruguay. I've been working in finance for the last maybe 12, 13 years, working in a brokerage firm in Uruguay. Then I went to the Multinational Investors Trust, a little time in Miami, then opened the office in Uruguay with Gustavo Otero, the head of Latam there, where we met Capital Vision. And I actually then embarked to Geneva some maybe 6 years ago from Uruguay to Geneva, where afterwards we opened an office in Madrid. And right now I've been in the last 5 years in Capital Vision, let's say a financial engineering company, where we give investment solutions to family office, independent financial advisors and banks to solve some of the structured products notes, products, let's say, mainly, and also some other tailor-made investments where we help these kinds of clients.
Tell me what does you give me an overview of what you do within Capital Vision to somebody who doesn't really understand the structured notes or don't really understand structured products. Why are these beneficial to both the investors across the world and the advisors? Why would they choose these products above a typical fund or or a platform product?
Yeah, okay. You need to understand, I think, always that structured products are like a vehicle inside 4 other assets, let's say, okay? So you can do structured products for stocks, for bonds, for let's say, yeah, fixed income, treasuries. You can do also for mutual funds. So therefore, it's an alternative to invest directly in one of those assets that already exist in the market. So you need to, I think, make a little sense if the yield products, let's say in this case, comparable to a bond or a treasury, if it makes sense to do it through a structured product, because the yield they give you, giving an issuer risk, for example, or adding an issuer risk gives you a little bit more yield or more pickup than doing it directly on that asset, let's say. The same wise, if you're doing in equity, if it makes sense doing it through a structured product than going directly through equity, because you have investments where you can, through a structured product, minimize risk, okay, while limiting a little bit on the upside. So the limit on the upside makes sense for you while having a security, a protection on the downside. Most of the people like it, and it has grown a lot in popularity. And not only because of that, I think we've been in a market in last years where right now we have high yield interest rates. I mean, interest rates are high. The US also has high rates. But 5 years ago, 6 years ago, maybe we had really low rates where the alternatives to fixed maturity for fixed income, mainly was structured products. And therefore, they gained a lot of popularity for yield enhancement products. I think structured products were the principal substitute to fixed income. Now, given that I think us and all other players and education we have given through, I think, not only Latin America, but the whole world, I think people know a little bit more of structured products, given that it's more popular now because people are more educated. It's a sophisticated product that people right now, I think, know a little bit more about it. And it's not that much sophisticated due to education us and other players have given in the region.
Tell me about the region. This year, our event that Capital Vision are sponsoring. We're very grateful for your support. You did the event in Montevideo last year, and I have to say, I've said it to you before, but the feedback we got from our our audience and from the delegates was your session was one of the best, if not the best. I've seen you on stage. You're very good on stage. Maybe you should be in a rock band. That could be your next step. Maybe we'll get
Hopefully, Gary. Hopefully, we leave the
we
financial side to a rock side. Cannot
yeah.
complain.
There's a correlation. I think we could do it. But tell me what you're going to be speaking about at this event. It's a different audience because it's Brazil. So what are you going to speak about to the delegates, and why is this region important to Capital Vision?
Well, Brazil has always been an important region for us. I mean, LATAM as a whole has been a really important region because the company started in 2017 with their main focus on LATAM, given the founders were the managers, let's say, on their corresponding banks for LATAM. So the main business was starting here. So a couple of years later, I think after the Southern Cone and Mexico, Panama, we started developing more Brazil, actually, and it has been a market, and it is a market really important for us. And we can see the proof because we've now incremented the team. We have grown the team as 50% more to give good service and to keep the expectations I think we need to fulfill for good service on that country. Of course, we need to hire people because the language barrier sometimes it's a complication, or it's easier when you have the Brazilian language people speaking there, being Portuguese or Brazilian, doesn't matter. And it's I think it's made more sense for the business. And what are we going to talk about on the event? Hopefully, yeah, it was a great event last time. Hopefully we can repeat and do a great presentation, as you say. But I think we will focus on some credit products that I think make more sense right now for the market, and explaining that not auto-callables or reverse convertibles that are, I think, the more popular products that people know on structured products. It's not always for the same time of the market, okay, to do always the same product. So you have other options inside the structured products universe where I think adapt better for each time of the market. So let's say now you have high rates, as I said before. I think credit products make more sense right now. CLNs, credit link notes on different countries that have a little bit more pickup, okay, than going through the actual bond, for example. And credit products, I think, are getting a lot of confidence right now in the clients. This year, to be honest, was the year that we've made the most CLNs in the whole history, let's say, of company. So that talks a little bit about the product right now in the market.